So today we're going to be taking a look at an update for my M1 Finance portfolio, which is my main dividend investing account. And I have some big goals for it, but what we're going to do is kind of talk about those as well as see how things are doing halfway through this month so you guys can see all the updates. So let's go ahead and go on screen here. Of course, we had Buzz Lightyear as our statue today, so we got a little bit of a cursor going on here for him. You can see as of right now that my portfolio is currently sitting at $12,075.97. Now, in my all-time, you can see that the total gains that we've had so far on this portfolio from money-weighted returns is $1,148. And for those that are not as familiar, money-weighted returns are when I've made a profit and that money has gone back into the overall account. But for those that are curious, if we go into our holdings here, you can see my unrealized gains, $638, which is about 5.58%. Now, that has been a significant drop because the market has been going down. And I do want to show this kind of stuff in the process of trying to build a portfolio, because if I only show you the good stuff, then you're not going to think that anything like this does happen. So you can see here in the last month, I'm actually only up $11.50. And if I go back to the week here, you can see that's where a huge drop off happened, where I lost $430. And sorry, I shouldn't say lost. I've so far had unrealized losses at $430 because until I sell those stocks, then I don't actually lose that money or had the potential to lose that money. So for me, things are still looking good. The day for Friday when I closed, everything was looking okay, pretty much broke even at 63 cents. But most of that was from the earned dividends that I had from a dividend going in and passing up their ex-dividend date, which we'll talk a little bit about here as well too. So across the board, not too shabby. Hitting over 12,000 is great, especially because if we take a look at our month overall right here for value over time, we could see here a month ago that we were at $10,235. So in a span of about a month, we went almost up 20% in our portfolio. Obviously, most of that is putting in the money, but that's part of the process, right? We want to be putting money into the account. So having us do regular deposits is always really good. But a majority of that did come in the last week when the market was dropping. I was putting in quite a bit. You could see here, right now for the last week, I put in $554, which is more than my average that I have been doing. So it's looking really good as far as putting in money, even with the market going down. All of my portfolio right over here, we're going to go ahead and take a look. Of course, we got our tech, growth, financials. I did switch over to Vanguard VOOG instead of the regular VOO. We got retail, real estate, consumer products, industries, and then we also have health as well. So all of those you could see in the last month. I think, yeah, we're in the time frame for the last month. You know, they've been taking quite a bit of a hit. Our growth, even with Tesla right over here, taking a big hit in the last month, I'm still up positive for them. If I look in the last week, they're down about 10%. So what happened was, of course, you know, the actual stock was going down and I was still buying into them as well because my hope is long term with them. So I'm not too worried about what's going on the short term. Now, I know a lot of people out there are quite worried with Tesla because they are quite overvalued based off of their PE ratio. And I'm definitely in agreement with that, but that doesn't mean I still don't want to put a little bit in just because I do want to have built up that ownership of Tesla. But beyond that, if we go and look at the rest of the portfolio, we can take a look. What I've really been purchasing a lot of lately, honestly, has been Apple and Microsoft. Obviously, Apple did their 4-to-1 split recently. I'm now sitting at almost 11 shares. A little bit of that actually came over the last couple of days as I've been trying to buy a little bit more in. Obviously, my average share is 98.29, so buying in at this time means that I'm actually paying more per share than, you know, what my average is. So my average is going up, but that's okay because obviously long term I still believe in the company. I think they're going to do great. Their dividend yield is obviously very low, but that's not why I get into them. The honestly, for me, are going to be something that I want to hold on to for a very long time. And then, like I said, the other one was Microsoft. So this one right here, I'm at 5.75 shares. I'm pretty close to the average share price right now. Honestly, I kind of want to keep buying into them. As you can see, let's go over the last quarter. So if we go look back on June 15th, I was at $239, and 3 months later, I'm sitting at almost $1,173. So quite a big big amount of growth, I increased the percentage on this for my M1 Finance, which, by the way, in case you didn't know, this is the platform I'm using, is M1 Finance. And if you're interested in it, I have tons of tutorials on my tutorial channel, but you can check out the link in the show notes if you want to sign up. It does help support out the channel. And if you need any questions answered for using M1 Finance, either leave a comment here or you can check out my second channel where I go over so many different tutorial steps so you can utilize this app to its fullest ability. Like I said, tech is where I've been putting a lot of my money. If we go in here, you can see here. So my last buy was 4 purchases. I had added $100 and I had about $2 and some change from dividends. Funny enough, it was actually from Microsoft, so I'm actually reinvesting in them. Because you can see I did 25 in Microsoft, 10 in Tesla, $60 in Apple, and then I did a little bit left over into Ross. And the reason for that is because they are close to where I was when I originally started purchasing them as far as price, and I see some great opportunity for them long term. So that was my more recent purchase. And then back on September 10th, I did a $200 deposit, a little bit in Tesla, like I mentioned, a little bit into VOOG, did a healthy amount into Google there, and then we did Apple and Microsoft. So I've been putting in pretty big chunks into these two companies, honestly, for like the last 2-3 weeks. Oddly enough, they are also kind of big in the VOOG space, if I'm not mistaken. Let's go into research here. Type in VOOG, and let's take a look and see. Yeah, so obviously the top 2 holdings are Apple and Microsoft. And let me actually, so I'm on seekingalpha.com. So let me see if they actually give me a better percentage on here. If I can see here. Oh, there it is, holdings. All right, so right over here we can see. So as of right now, Apple is about 10.64% of this actual stock right over here. Well, of this ETF, not a stock. Let me actually get my little marker here. So we have Microsoft right over here at 9.55. So the interesting thing about me holding on to Vanguard VOOG is I do have all of these companies already in my M1 Finance portfolio. I do have PayPal in a separate Robinhood account, which I'm doing mostly growth focused stuff on. So it's kind of interesting to kind of double dip into Microsoft and Apple since they are the largest majority of this fund or ETF. So it's kind of an interesting take on it, but it still makes me feel fairly diversified as far as being invested in all these individual stocks that I have in all of these slices, but then having my VOOG be about 10% of my portfolio. So I think it helps keep me a little bit more balanced. Obviously, VOOG is more of the growth focus, as you can see right over there above Buzz's head. It says growth ETF. So that one's a little bit more aggressive. I'm down on it technically because when I swapped over from VOO to VOOG, the market definitely took that dip. So for me personally, that is totally fine. I'm just going to buy more in, as you saw earlier, which if we go back, I'm going to continue going on here. So those are my most recent purchases. And then I have, when I had a dividend, I bought in. And then the September 8th, I had 14 purchases. So this one, I did a little bit of letting M1 Finance do its thing. So you'll see some different numbers. If you usually see like a solid like $17, that's me doing it. $20 right there. But like AT&T, Lockheed Martin, Pepsi, all these different companies. These ones right here, I actually did personally let M1 Finance kind of just do its thing. So that way those things were still growing in their portfolio holdings. So that way the target percentages weren't so off. One thing I also do focus on, of course, here on this portfolio is going to be with dividend stocks. But before I show you guys all the dividends that I've earned so far, one thing I do want to kind of quickly mention is if you enjoy these type of videos and you want to support the channel, at the top of the show notes, I will have a link for student loan refinancing. So if you still have student loans and you want to check out some potential lower rates, click on that link down below and see if you can, save some money. And the cool thing is if you do save some money, that can go towards investing some more, which is awesome, but then you also support the channel. But the really cool thing is that link down below also does give you a nice little bonus if you end up going through that process. Now, let's go ahead and take a look at the dividends. And let's see what we ended up earning for the month thus far. So we're, still kind of midway through September here, but we can see here, I'm gonna actually bring up my little marker because I like using that. So If you haven't checked it already, I do showcase at the end of the month how much I've earned for each one, so you can see how much I earned for August in a previous video. So right now, September 1st, I got from Aflac $4.11, which is great. And then from Pfizer, I kind of cut them off. Pfizer right there, you can see I got $2.05. We got Visa over here at 36 cents. They're obviously mostly focused on the growth aspect for me. We got Discover Financials at $3.06. And then we have Johnson & Johnson at $1.88. And then as I mentioned earlier, we also have Microsoft that paid me that $2.20. Now the cool thing is I do have a Google spreadsheet that I put together that actually showcases, I can plug in all my numbers and it shows me how I'm doing overall. So you can see over here in September, I have that $13.66 thus far. And normally the third month in a quarter is the best month when it comes to dividends. So I'm still about halfway through, and I got a lot of companies that are still planning on having my money coming in from them. So this is going to definitely grow a little bit more than what we see here. But so far, that 1366 is pretty awesome. I mean, I cut it off again. But you can see right over here, the month of August, we made 2181, which is pretty awesome across the board. But I do expect September to be a little bit better. And if I scroll down here, let me kind of do this here. So I have this little chart graph that I made over here as well too. So you can see over here that we already pretty much doubled what we made in the last quarter, which is awesome. And we still have a few more weeks to go in this quarter. So it's going to be nice to see how much higher this can go. And I think Q4 is going to be even better than this because we'll probably have some companies increasing their dividends, hopefully in the next couple of months. Now, for anybody that's kind of interested in this, I do have this entirely for free down in the show notes below. If you want to click on that, you can download this dividend tracker entirely for free. That is something that I put together. And then from there, if you like, you can go ahead and download it and start using it yourself. You can see here as well, the total that I've made so far year to date in dividends is $80.38. Now, I've been reinvesting all of that back into the portfolio. So it's not anything that I've taken back out. I just keep on investing it so that way it compounds over and over again. So let me go ahead and clear this up right over here. So I'm happy with how the dividends are turning out, especially with the amount of growth we've been having. Because if we go back, let's take a look. So I know we did the last month how we grew about $2,000. And then if we go for the quarter, you can see 3 months ago we were sitting at $6,290.71. So we've almost doubled the amount in this portfolio just in the last couple of months. And then in the year, this is going to be fun. A year ago, we were at $441.88. Now, for anybody who's been, kind of paying attention to this, I actually started off with about $10 a week for a little while, then bumped it up more and more as I got more comfortable, as I was starting to earn a little bit more across the board from everything we've been doing. And the nice thing is the whole process is only possible because we were staying consistent in the process, right? So it wasn't something where I was like, well, I'm going to wait until I have enough to be able to do $100 a week. No, I started off with 10. And the cool thing is with M1 Finance is you can start off with $100 to open up your account, but then you can put in $10 a week. You do have to do manual pays, but once you do that and get over, to a point where maybe you're doing $25 a week, then it will auto invest everything for you. So you don't even have to worry about a single thing, which makes it really nice and really easy to use. But, beyond that, I think for me personally, I'm just excited about where this goes. I am planning on doing a deposit here for Monday's trade. So I'm going to show you guys kind of how my deposit's going to break down for me here. So I think we're going to be doing, because I was doing a little extra with the market down, so I think we're going to be doing only about 150 for Monday. Normally it's about 200 to 250, but since I've been doing those smaller increments throughout the week with the market dropping as much as it did, I don't want to go too heavy. And if the market keeps on dropping, I will keep on investing as well too, which is a really big deal. Because when you buy on the dip, which is what a lot of people talk about, or if you've heard about it, it's when the market's going down, like you see here, for the last week, all these stocks are going down. That just means it's more opportunity for us to buy things on a discount. And for me, that's what I'm doing. So I'll go back into Apple as that example, right? So, right over here, I think what was their peak? Let me actually go into here. So if we go over here, so their peak, oh, well, that was when they split, so that doesn't help. Where is it? Okay, so 134.18 is a great example. So on September 1st, they were $134.18. So if you bought, let's say you put in, I don't know, $100 into this, you would obviously be getting a healthy amount of one share, almost one share of the stock at 134. But because they're at $112 right now, that $100 would buy you more of a share than if you bought it on September 1st. So that's the nice thing, but the problem is, people don't know if the market's going to go up or down. So if you bought at $134 by putting $100 in, and you're like, well, I still like the company, and you put another $100 in today, well, all of a sudden you're dollar cost averaging, which means you are lowering the amount of your average cost because you paid $100 here for the stock at 134, and now you're paying $100 at $112 price tag. So you're effectively going to be saving money if you believe that the company is going to continue to move forward and grow over time. You're just essentially getting it at that nice discount. So let's go back to the main page here, and we should be ready to go to see our upcoming trades, which we could see right here. Upcoming trades, we got 15 purchases. So I click on view details. This is just going all based off of my percentages in my portfolio. So we'll see here, like Realty Income is going to get about $21.89. Home Depot about $21. ADP about 18. Vanguard VOOGs about $12, and so on and so forth. You can see NRZ. Pepsi is about $10. Same thing with Ross. At $8, we're getting a little bit into Hasbro, a little bit into Digital Realty Trust. And then same thing with Kraft Heinz. And then around the $5 marker, we have Lockheed Martin, 3M. We also got Costco around the $4.50 marker, P&G at the $1.81, and then Starbucks at $1.13. So I can leave that at that if I would prefer. I can also do manual buys if I really wanted to. So if I'm like, hey, you know what? I kind of want a little bit of the money going into Apple again, even though I've already been buying into them. I can go ahead and click on buy inside of that, little screen there for Apple. So you can see here, I can buy, sell Apple. So we're going to buy, and I can do, let's say $15. So about 10% of my deposit is going to go into here. And I can confirm my buy. And once that goes through, click on done. And then I can go back to my home page. And now when I click on view details, you'll see Apple right over here is going to get $15. So it's going to be tossed in here, and everything else is going to get a little bit less. On this platform, the reason it does that is because my actual percentage is 25%, and the target that I set for this pie is at 24%. So this is actually 1% higher than I would prefer it to be, or at least that's what's happening because of the growth in comparison to the rest. So no money was going into there, but I just manually did it anyways. So we'll see that money going in on Monday. We'll see it continue to grow. So that way it's going to buy in. And if the market honestly goes down the way it's been going for that last week and it drops even further, then I'll just do another buy on Tuesday too. So I'm not too worried about, the market going down even more. And if it does, I'll just keep tossing in more. Now, if anything happens like in February where the market drops, 30, 40% almost in some areas, then yeah, I'll definitely be throwing in even more. But I don't want to do that yet because the market's not in a position for me to throw in a ton of extra money. So as of right now, I'm just kind of doing my weekly buys a little bit more often right now because of the way the market is. And if we see bigger dips, that just means I'm going to deposit more money because I'm going to get more value for the stocks that I believe are going to be around for the long term. The companies I have right now, I got 28 different individual stocks and then that ETF. So for me, I don't really see myself buying and selling a lot of different stocks at the moment, but if that changes, I will show you guys and follow up throughout the next couple of months on how, everything is going with the stocks that I currently have. So I want to make sure you are following along in this investing journey. So make sure you hit that subscribe button down below and be following along every time we post a new video here on this channel. And if you want to keep on learning more with my investing journey, check out my next video right over here. My name is Dennis, and I will see you in that next video.